How's it going, everybody? It's Stas here. Hope you guys had a great weekend and are ready to get back into it. I for sure am. And in today's video, like we do every single Sunday, we're going to break down the market, some stocks, some charts, my game plan for this upcoming week, plus more. So sit back, relax, hit the like button, subscribe, take a sip of your coffee. Trust me, you're probably going to need it for this one. And check out my Patreon down below if you guys want all my real-time buys, sells, call outs, morning update videos, plus more. All of that's on Patreon. And with that being said, let's get right into the video. So the markets last week, when it comes to SPY, which tracks the S&P 500, hit an all-time high. You guys can see SPY hit $454.67. And at this point in time, I have my alert set at $455. I want to see point blank period if we end up breaking out of this point. Do we end up seeing a leg up towards 460, maybe even higher than that? And the yearly chart could be setting up for that. You guys can see we've been uptrending the past year, and we held a higher low. We had that inverse head and shoulder that we called out in the previous couple of weeks here on YouTube. We held above the 180 moving average on this time frame, and if the uptrend continues, yep, you guessed it, right? We're going to see a leg up out of 455, which is why, again, I have my alert there. So overall, when it comes to SPY, very simple. That is what I'm looking for. And pulling up QQQ, let's see what's going on here, guys. We're seeing QQQ is still fighting between 380 and 375. That's where it's been stuck for the past couple of trading days. And this week is huge. I mean, there's so many companies that are reporting. I have 30 listed here. And no, we're not going to talk about 30 today because the video would be an hour long. But let me name them off for you. Are you ready for this? Get ready. We have Facebook, Microsoft, Kimberly-Clark, UPS, JetBlue, 3M, AMD, Google, Visa, Twitter, Robinhood, Raytheon, Lockheed Martin, Boeing, Coca-Cola, McDonald, Spotify, Six Flags, Upwork, Ford, Teladoc, Twilio, eBay, Shopify, MasterCard. Is your mind blown yet? Well, it's going to get blown even more. Caterpillar, Apple, Amazon, Starbucks, ExxonMobil, Chevron, and the list goes on. Those are the most prominent companies reporting this week, but there's way more reporting this week. So, needless to say, this week is huge, right? The markets are going to be volatile this week. They're going to be moving. And if you know anything about big tech, well, they're a huge part of the market. I think they're like 20-30% of the S&P 500. We're talking Facebook, Microsoft, Amazon, Apple, Google. Those five companies are 20-30% of the S&P 500. No joke. They have a huge weighting. So if we're moving very aggressively in either direction in those five companies, you bet your you-know-what, the markets are going to be moving aggressively as well. And we are going to break down 10 stocks in this video. Out of those 30 that I just mentioned, we're going to break down 10 more in depth, which is what we're going to be talking about for most of this video. And if you guys do find value in the video, hit the like button. Let me know your thoughts in the comments. And let me know, are you guys ready for this week? It is going to be unbelievable. I'm super excited. This is typically the best time in the markets. Well, it is the best time in the markets when we are having a bunch of these big companies reporting earnings. So let's just get into it. I don't want to waste too much time in the beginning of this video. Let's just get into these stocks, guys. And number one is UPS. And we all know FedEx has been in the toilet. UPS pretty much as well has been in the toilet. But in terms of stock price, UPS is breaking out here on the 4-hour chart. It's trading above both moving averages, and we've actually seen a sizable move in just the past couple of weeks, 2 weeks in particular. This has gone from 177 to over 200, which, to be honest, is a bit surprising to me. This is up 13% in the past 2 weeks, while FedEx, let's pop that up, is down a lot more than that. Well, I mean, listen. FedEx is down, let's see here now, about 26% from the all-time high. UPS is down roughly 6%. So that's pretty crazy. I mean, FedEx is down 20 more percentage points. And when we're looking at the rebound in the past 2 weeks, UPS, like I said, rebounded 13%, while FedEx also rebounded, but not nearly as much. FedEx has rebounded about 6%. So it seems like the stock price for FedEx has been hit a lot harder than UPS. But don't get me wrong, both of these companies are going through it right now. Supply chain problems, labor shortages, you name it, FedEx, UPS, both of those companies are going through it. But as FedEx already reported, we're not going to talk about them today. They reported about a month ago on the 21st of September. But UPS, on the flip side, they report, let's see here, on the 26th. So not tomorrow, but on Tuesday, UPS is reporting. So no doubt about it, UPS is overbought. Like I said, it's ran 13% in the past 2 weeks. On Friday alone, it went up $4, up 2%, and it needs to pull back. So in my opinion, if UPS could pull back anywhere near 190 to 195, near those moving averages on the 4-hour chart, that could be a point of potential entry. As always, please, guys, do your own research. But based on this chart, yes, we're breaking out. We're doing well. But we got to see some weakness in the breakout. Just because a stock is full on breaking out doesn't mean you got to rush into it. You got to play it, what's the word here? You got to play it patiently, right? Wait and be strategic with your entry points. You know, I wouldn't rush into UPS at 200, but if it pulled back towards the low 190s, now we're talking. I would get in, especially after the earnings report, if we get more clarity on their situation, EPS, revenue, guidance, and so forth. So UPS, United Parcel Service, looks good, but we just need to see it cool off a bit. Stock number 2 is my favorite stock out there from a long-term perspective, which, if you're looking at valuations, guys, which we're not going to get too in-depth in this video, but when you're looking at valuations for the big tech names, Amazon, Google, Facebook, Apple, Microsoft, out of those 5 companies, in my opinion, Google, which we're going to talk about right now, is the most attractive when it comes to valuation. I think their P right now, let me pop it up on Yahoo Finance. I don't want to give you guys inaccurate information, but I think their P is like a 30, maybe a little bit less than that. Let me pop it up here, and that is trailing P, I believe. Yeah, I nailed it. Trailing 12 months P is 30.07 right now, which for a company like Google, it's growing a lot. I think it has a lot of future growth 5-10 years from now. 30 PE, I'm willing to pay that. And in fact, I bought more Google, I believe, on Friday, which goes to show I'm putting my money where my mouth is. And I've been holding this stock for quite some time right now, and I do not plan on selling it anytime soon. In fact, if it goes lower, I plan on buying a lot more. So Google reports earnings on, let's see here, the 26th. So that's on Tuesday, same day as UPS. And the stock actually took a bit of a haircut on Friday. It went down 3%, which is why I bought more on Friday. And now it's trading in the high 2700s, and it's about, let's see here, 6-7% off of the highs, which for me, my rule with Google is, as long as it's, or well, let me put it this way. If Google falls 10+% from its recent highs and everything in terms of the business fundamentals remain the same, which in this case they have, if Google falls 10+%, I'm buying more. That's kind of what I do with my staple individual stocks and the overall ETF, overall S&P ETF that I own, which is VOO. I pretty much buy that every week regardless, but with individual stocks, my favorite stocks, when they fall 10+% or close to it, I'm averaging in more, right? Especially if the fundamentals remain the same, which again, Google's have remained the same. So they report earnings in a couple of days. They're trading under both moving averages now on the 4-hour chart. We're noticing a wedge here on this time frame as well. Higher lows are being made plus lower highs, at least since the beginning of September. So I want to see what direction do we pick. And quite frankly, if I'm being selfish here, I want Google to tank after earnings, which it rarely does that, I feel like. It seems like every time they report earnings, the past couple of quarters at least, they've gone up. So if they tank this time, selfishly, I kind of want them to do that. I'm going to be buying more Google. So we're going to watch this wedge here on the 4-hour for this particular stock. Amazon is also in a wedge, which I also bought more Amazon on Friday, and this one's a bit more expensive valuation when it comes to the valuation compared to Google, but I still think it's pretty decent considering the growth that Amazon has the next 5-10 years. I'm willing to hold this stock for quite some time, and I'm willing to buy here. This particular stock is down from $37.70. Now it's at $33.30. It is down 12%, so it's down more than Google. It's actually in correction territory, and the same principle that I use with Google whenever it goes down close to 10 or more than 10%, I buy more. That same principle I apply to Amazon. And I don't own, for everybody out there that's wondering, I'm not this guy that owns all the FANG stocks. I'm a fanboy of the FANG stocks. I only own 3 of them, right? Amazon, Google, and Apple. I used to own all of them. I'll be quite honest with you guys. I used to, but I got out of Facebook and I got out of Microsoft, which I've mentioned many times on this YouTube channel, due to the fact that I don't want to be too invested in the big tech names. And on top of that, own the S&P 500 ETFs that I do own. Well, there's only one that I own, VOO, which, like we mentioned in the beginning of this video, that is heavy in big tech as well. So I don't want to have too much exposure there, but I want to own some of them, which again, I'm owning my favorite 3, Apple, Amazon, and Google. We could argue that all you want. Some people like Facebook more than Amazon. Some people like Microsoft more than Apple. But in my opinion, Amazon, Google, Apple, those are the top 3. So, and that's in my opinion. Again, don't get it misconstrued here, guys. You know, you could have your own opinion, right? That's the beauty of America, right? Or if you're watching this outside of America, maybe Canada, in Europe, I don't know. You guys could have your own opinions as well. So let's take a look here at the chart. We're also in a wedge like Google. We're trading under both moving averages now. We clearly got rejected by the top of this wedge on the 4-hour chart. That was on Friday as we went down 3%. So we're going to see what happens here. You know, do we end up going down 32, 3,100, more towards the bottom of this wedge? Do buyers step in here and make it rebound towards 34 plus 100 again? That's kind of what I'm looking for. And looking at Apple's chart, this is one that's not in a wedge. They report earnings here on the 28th, so on Thursday. And I forgot to mention, Amazon reports earnings on, let's see here, Thursday as well. So on Tuesday, we have UPS and Google. On Thursday, we have Amazon and Apple. And Apple's one that's breaking out. This one's above both moving averages. We got some news. Let me pop it up here on my iPad if I can find it. We got some news the other day about some estimates for the iPhone. Oh, here it is. Apple is expected to exceed Q3 street estimates across the board when they report their results. That's what Wedbush Securities believes. The street estimates that the iPhone maker will report Q3 earnings of $1.23 per share and revenue of $84.8 billion. And let's see here. These Wedbush analysts believe that they're going to do well with the iPhone 13 launch, and it's going to do better than investors expect, which, hey, I don't know. We'll see how that goes. I personally don't have the iPhone 13, which we've talked about before here on the YouTube channel, but you guys know how Apple is. A lot of people, whether they need a new phone or not, they just buy the new phone every year. That is just the way that the American culture is, consumer-based. They buy things every year, whether or not they need it. I'm not like that personally, and I know some of you guys probably aren't either. I had the iPhone 8 for about 4 years or something like that, and then I ended up buying the 12 about 8 months ago, and I love the 12, and I don't plan on getting the 13, but if the 14 is sick, maybe a year from now, I'll go for that. But that's just me. And again, overall, Apple stock is breaking out. And a key spot here is for this not to be a head and shoulder, pay attention here. For this not to be a head and shoulder, Apple needs to break out of the neckline here. Look at this. And I just caught this, by the way. So good thing I'm seeing this now. we see a huge head and shoulder potentially forming here, especially if Apple fails to break the neckline, which as of now it is, the neckline being at about 148. So I'm going to put my alert for Apple at $150 per share. If we break the neckline, this should rip, in my opinion, to all-time highs, maybe even before earnings, especially after earnings if they do very well. So watch out for Apple. Starbucks is another one that I'm looking out for. This one's in a wedge. Higher lows, lower highs, all that good stuff. And on Friday's session, we had barely a green day, up 11 cents. And now we're trading a little bit above both moving averages, but again, we're trading within this wedge. So I'm looking to see if Starbucks can break out. I'm going to set my alert at 115. Let's see what it does from there. And I do see earnings are on the 28th. So same day as Amazon and Apple, Starbucks is reporting. So let's see how that ends up playing out. Twitter is another one that I'm looking at here. It went down 5% on Friday. And that was really in what's the word here? That's because Snapchat went down 25%. So Twitter, because of that, kind of fell as well. Facebook fell as well. So Snapchat dropped their estimates for the upcoming quarter, and they missed revenue for the previous quarter. So that was an abysmal day for Snapchat, and Twitter suffered as well. So I want to see what Twitter reports. This is critical. Do they cut their sales guidance? If so, we might see a similar drop to Snapchat. Do they not cut their sales guidance? Do they miss revenue? Do they beat revenue? They report earnings on the 26th, so Tuesday, same day as UPS and Google. This is huge, guys. If Twitter completely blows it, like Snapchat, we might have a buying opportunity on our hands. Not telling you to buy. Let me be very clear. For me, I might have a buying opportunity, but quite honestly, I rather own Twitter or Snapchat over Twitter. Actually, I don't know. I don't want to go on air and say that. It's kind of a toss-up, right? It's 50-50. I don't know. I'm actually super close to just buying Snap as a relief rally play. I mean, this thing went down 27% on Friday for a company that, let's be honest, it's not going anywhere. It just had a hiccup quarter. I think this could be an opportunity. If you have extra cash laying around, you want to buy something that's very beaten down in hopes of it coming back, which I believe it ultimately will. In fact, not that I'm piggybacking Kathy Wood, but I got her email alert the other day. She bought like 250,000 shares of Snapchat, and I'm sure some of you guys saw that. So she's buying the dip, and trust me, I do not follow Kathy Wood with her plays. Nowhere near it. I don't even think we own any of the similar stocks other than Tesla, maybe some other ones, but I'm not following her. But the fact that she bought a little bit, 250,000 shares, which for her is a little bit crazy, right? That's a pretty decent sign, I would say. So I'm about to pull the trigger on a little Snapchat, maybe like 100 shares, a little position. I don't know, maybe a little bit more. We'll see. It really just depends on how Monday goes. I'm a little bit nervous because Twitter, if they report terrible earnings, that could cause Snapchat to go lower. I don't know. I mean, we got to keep that in mind. We also have Lockheed Martin reporting. They report on, let's pop it up here, 26, so that's on Tuesday as well. A lot of these companies are reporting on Tuesday. And this stock is breaking out, and the chart looks very similar, even though these companies are not, in the same sector. It looks very similar to UPS. Look, UPS is breaking out. We talked about it already. It's pretty overextended. Same with Lockheed Martin. It's breaking out after a couple of months of getting slammed. I mean, this stock went from $400 in June, and it got all the way to $330 in September. So it dropped about 15%. Every month, it kept going lower and lower. And now, over the past roughly 1 month, it's rebounded from $336 to $370. And now we're a bit overbought, like UPS. We're a bit extended above the moving averages. So I would love to see Lockheed Martin take a bit of a haircut, maybe towards that high from the end of August, 360, 365. If we're able to pull back there towards the moving averages, I think buyers could step in on Lockheed Martin on that dip. Spotify is another one that I'm looking at here, which, man, Geez, guys, this stock has been in the toilet. I mean, look at this stock on the yearly chart. This was once a $380 stock in February, about 7-8 months ago, and now it's at $250, and it got all the way to $200 back in the end of August. So this one almost cut 50% from $387 to $200, and now it's rebounded from $200 to $250. And they report earnings what day here? On the 27th. So that's on Wednesday. And I feel like every earnings report, at least the past two, recently have not been good for Spotify. You guys can see last time they reported, or 2 times ago, back in April, the stock price went from $299, $300. It tanked to about $257 after they reported. And then the last time they reported, the stock price went from $245 down to about $220 the next day. So I got to see this. I'm wondering what they're going to report. Overall, the trend is starting to turn. I mean, bulls are starting to gain a little bit of steam, but overall, it's not breaking out yet. It's not out of the woods. Even though it's trading above both moving averages, it's still not out of the woods. I think we are going to struggle a bit in the 260 to 270 to 280 level. That is where we got rejected in the beginning of September, also back in the end of June. So I think sellers could step in there. But if Spotify is able to break 280, 270, now we're going to start gaining some steam. So I'm going to put an alert, and I don't think this is going to happen in a week or two. It might take some time, but if Spotify is able to get out of 280, now we're talking on a reversal, especially 300. If 300 breaks, wow, that's going to be good, right? That's going to be a good sign. So let's go over 2 more here before I wrap the video up. Guys, make sure to hit the like button if you are enjoying this video, finding value, because this week, it's going to be a big week. McDonald's, let's take a look at it. We've talked about it already a little bit before, I think last week, but let me show you all again. They report on the 27th, so on Wednesday, and what do you see here on the 4-hour? A clear-cut uptrending channel, right? We've been making higher highs, higher lows, and on Friday, we went down 1.2%, and overall, the past couple of days, we're down almost 5%. So now we're at the bottom of the channel. I want to see if buyers step in. Point blank, period. Very simple. Do buyers step in at 238 to push it above 240? That is where I believe we could make a move back towards the top of this channel. And Six Flags, let's pop it up. SIX. Have you guys been to Six Flags? I sure have. I live in New Jersey. We have a location in Jackson, New Jersey. There's also a location, I don't know where the other location is. I'm blanking on it. But yeah, there's a big location here in Jersey. I used to love Six Flags as a kid. I used to go all the time, but I haven't really been recently the past couple of years, and I'm kind of a baby now when it comes to roller coasters. As I'm getting older, guys, and by no means am I old. I'm in my 20s, but as I've gotten out of my teenage years, my young teenage years as well, I've kind of been more scared of roller coasters. I mean, go on Google right now, or after this video, go look up King Dakar. I think that's what it's called, or maybe even they changed the name. I don't know, but there's this roller coaster, and that's a voice crack, by the way, roller coaster in Jackson, New Jersey, where it goes up like 400 feet in a straight line. And first, before we even go up 400 feet, you start at a still. You're still, right? And then all of a sudden, it shoots 100 miles an hour. Imagine this. I think it hits top speed of 120 miles an hour. You shoot straight, and then you straight up climb in a straight line at 100 miles an hour. This is not a slow climb roller coaster. It's 120 miles an hour, guys. This stuff is insane. And then you hit the top, you hit the peak, and then the roller coaster stays at the peak for a second, and you're like 400 feet in the air, and then all of a sudden, boom, you go straight back down. It's one of these roller coasters where it's not loops and all this crazy stuff. It's straight 100 miles an hour up, straight up 100 miles an hour. You stop at the peak, and then you drop right back down, probably even faster than 100 miles an hour on the way down. And I don't even know how I did that. I did that first when I was like 12. I did it maybe once when I was 16. And at this point in time, you couldn't pay me to do it. I don't know what it is, but with roller coasters, my fear of heights have gotten a lot worse the past couple of years. But anyway, that's a side tangent. Go look it up. Type in King Da Ka. Go look that roller coaster up. I don't even know how I did that. But overall, Six Flags of stock looks decent. It's breaking out kind of. I guess it is. It's above both moving averages. They report on the 27th, which is on Wednesday, and I'm seeing an inverse head and shoulder here. Check it out if this wants to work. There we go. We have the left shoulder here. We got the head right here, and then we got the right shoulder right there. You guys see what I'm talking about? That's what I'm seeing. So if this plays out, there is a chance over time, it might take a couple months, couple weeks, I don't know, but there's a chance that Six Flags fills the gap towards 50 to 52. That is where the right shoulder and the inverse head and shoulder would complete. So keep your eyes on these stocks, guys. Six Flags, McDonald, Spotify, Lockheed Martin, Twitter, Starbucks, Apple, Amazon, Google, UPS. These are my top 10 for this upcoming week. And please go on YouTube and type in King Da Ka. You got to look at that roller coaster. It is unbelievable. It's the craziest one I've ever been on. And I don't even know if it's still operating. I hope not, because it might give somebody a heart attack. But it might still be operating. So we're going to wrap it up here. If you guys enjoyed it, make sure to hit the like button, subscribe, drop me a comment, and check out my Patreon. If you guys want all my real-time buys, sells, call-outs, morning update videos, plus more, all of that's on Patreon. Link down below. Make sure to also get your 2 stocks from Webull, your $30 from M1 Finance, literally free money, also linked down below. And I made a video yesterday going over my biggest mistakes in the markets. Got a lot of positive feedback on that video. If you didn't catch it, I'll pop it up here. I'll see you guys there. Thanks for watching. Again, as always, keep crushing the markets. Stay safe out there. Peace out.